Hey everyone, and welcome. Today we're diving into a topic that's crucial for building financial freedom, the difference between active and passive income. It's a concept a lot of people talk about, but it's often misunderstood. We'll break it down simply, with examples relevant to folks here in the US, and explain why understanding this difference can be a game changer for your financial future. So what is the difference? Simply put, active income is money you earn in exchange for directly trading your time for dollars. Think of a traditional 9-to-5 job. You show up, you work, you get paid. It's a linear exchange. The more hours you work, generally, the more money you make. This includes things like hourly wages, salaries, and even income from freelance work where you're billing by the hour. If you stop working, the money stops flowing. It's pretty straightforward. Now let's talk about passive income. This is where things get interesting. Passive income is money you earn with minimal ongoing effort. It doesn't mean you do nothing. It usually requires some upfront work or investment, but the goal is to create a system that generates income while you sleep, travel, or focus on other things. It's about building assets that work for you, rather than you working for the money. Let's look at some examples to really solidify this. A classic example of active income is being a teacher. You're directly exchanging your knowledge and time for a salary. A doctor, a lawyer, a construction worker, all active income earners. You perform a service and you get paid. Now how about passive income? Let's say you write an ebook and sell it on Amazon. You put in the work up front, writing, editing, formatting, and publishing. But once it's live, it can continue to generate income for months or even years with minimal additional effort. That's passive income. Another example is investing in dividend-paying stocks. You buy shares of a company, and they regularly distribute a portion of their profits back to you as dividends. You don't have to actively work to earn those dividends. The company does the work, and you receive a return on your investment. Real estate is another popular avenue. If you rent out a property, you receive rental income each month. While there's maintenance and management involved, it's not a direct trade of your time for every dollar earned. The property generates income even while you're not actively working on it. Think about creating an online course. It takes time and effort to create the content, film the videos, and set up the platform. But once it's done, you can sell it repeatedly without having to reteach the material each time. Or consider affiliate marketing, promoting other people's products on your website or social media and earning a commission on each sale. Why is understanding this distinction so important, particularly for those of us in the US? Well, most of us are taught to rely solely on active income. Get a good education, get a good job, work hard, and earn a paycheck. And that's perfectly valid. But it also creates a vulnerability. What happens if you lose your job? What happens if you get sick or injured? What happens when you want to retire? Relying solely on active income can limit your financial freedom and put you in a precarious position. Passive income provides a safety net and allows you to diversify your income streams. It gives you more control over your time and allows you to pursue your passions without being solely dependent on a paycheck. Building passive income streams isn't always easy. It requires initial investment, whether that's time, money, or both. There's also often a learning curve involved, but the long-term benefits can be substantial. It's about shifting from a linear income model, where your earnings are directly tied to the hours you work, to a more exponential one, where your income can grow even while you're not actively working. Now, it's important to be realistic. Passive doesn't mean effortless. Most passive income streams require some level of ongoing maintenance and effort. You might need to update your ebook, manage your rental property, or promote your affiliate links. But the key difference is that the effort required is generally much less than the effort required to earn the same amount of money through active income. So let's quickly recap. Active income is earned by directly exchanging your time for money. It's predictable but limited by the number of hours you can work. Passive income is earned through assets or systems that generate income with minimal ongoing effort. It requires upfront investment, but offers the potential for financial freedom and diversification. Ideally, you want to strive for a balance between the two. Active income provides the immediate cash flow you need to cover your expenses, while passive income builds long-term wealth and provides financial security. Think of it as building a financial foundation that allows you to pursue your dreams and live life on your own terms. Remember, this information is for educational purposes only and should not be taken as financial advice. Always consult with a qualified financial professional before making investment decisions.